Greetings, members one and all of the Salivation Nation. Before you trade your silver for gold, consider this. Let's explore. Bama17NC sent me this article. I thought it was quite interesting. This is from KelseyWilliamsGold.com and says there's absolutely no comparison between silver and gold. I agree with some aspects of this article, but in others I don't. And I'm going to talk about that in relation to spot price and trading silver for gold, because I'm starting to see more and more folks making that move and asking questions about it. And it's just something to kind of keep in mind on why I typically don't trade silver for gold, at least in the physical. And we're going to talk a little bit about that, and maybe perhaps a way that it can be done on the electronic markets. And this is what we need to keep in mind when we talk about spot prices as well. So this article goes on to talk about the comparison between gold and silver, when it talks about that there's absolutely no comparison. Now, I certainly understand where the author's coming from here, but make no mistake, there is a comparison, and we should consider the comparison. In the 5 months between March and August of this year, the price of silver increased from a 14-year low of $11.77 per ounce to a 7-year high of $29.26 per ounce. It's a whopping gain of 163%. Now, that's something we've talked about in prior videos as well. You know, I don't know of anybody who was able to get silver for any normal premium above spot price when it was $11.77, save for maybe a few at Scottsdale Mint, and it took quite a while for them to take delivery of that silver. And but nonetheless, not many people I know were able to take advantage of that spot price. And when silver was at $29.26, there was not many people that could take advantage of normal premiums even at that price. So when you buy the physical, you have to take into account premiums, and more on that later, for those who are thinking of trading silver for gold. The article continues that meanwhile, gold's price rose from its low of $1,472 per ounce to a recent high of $2,061 or $2,061. That represents a gain of 40%, which is certainly a handsome number. Nevertheless, silver's performance outshone gold by a ratio of 4-to-1 in the paper markets. However, 5 months doesn't tell the whole story. For those who were and are hopeful that this is just the beginning of silver's day in the sun, be warned. Looking at the bigger picture historically, silver can't hold a candle to gold. And it's for part of this is some of the reason why I have shifted my focus. But there's other reasons as well, even if this trend has not occurred. We referred above to silver's price outperformance relative to gold for the most recent 5 months. Here's a chart that shows that same performance within the context of the last 5 years. Now look at this. Now the colors they use and the lines they use really a little bit confusing in some way, but you can see that both metals started their 5-month run to recent peaks. Gold, which is the blue line, which it makes no sense, was already up 80% from its low in 2015. At that time, silver, which is the gold line, which makes no sense, was actually lower than it was 5 years earlier. In the 4 years leading up to 2020, gold's price gain of 80% dwarfed silver's net loss by an infinite number. So you can see what's happening here. Hence, much of silver's outperformance relative to gold was, in some respects, actually in all respects, just a matter of regaining lost ground, with a bit of an increase there towards the end. If it was to go from its points from before the major dip, you would not see nearly that big of a performance gain. So this net effect remains that for the 5-year period, gold actually outperformed silver. Not by a lot, but it certainly calls into question interpretations and projections for more outperformance by silver going forward. The author makes a good point here. You can pick any particular point in time on a chart and graph and make a case for any of the two metals outperforming one or the other. So we look at gold to silver for the past 10 years and then 100 years. So if you look at these results and consider that choosing between the two metals is a toss-up, over a reasonable length of time, maybe it doesn't make much difference whether you own gold or silver. So let's look at another chart. This one below is also a comparison of gold prices versus silver prices over the past 10 years. Same color scheme where blue is actually gold and orange is actually silver. Can't wrap my head around why they would use that color representation. It should be exactly the opposite. So we can see that gold for the 10-year period is up 50%. Silver, on the other hand, for the 10-year period is essentially unchanged. And we can see there what's happening over this course of time, how the metals ran fairly close together, especially around 2013, all the way down to 2016. And then you started to see a widening really starting around 2017. So that you can see that comparing the current prices for both metals to their peaks in 2011, gold is unchanged, silver is lower by 55%. The further back we go, the worse it looks for silver. The next chart shows gold prices versus silver prices over the past 100 years. And look here. We can see how the metals kind of run in correspondence with one another, but they kind of widen, and then look here, they're widening again. It's important to note the focus on the widening gap between gold prices. Again, they have to note with the blue line and silver prices with the gold line, not the relative symmetry of their price action. Over time, the gap continues to widen in favor of gold prices. This widening gap translates to a higher gold to silver ratio, which can be seen on the chart below. And this is one reason why I talk about this. The gold to silver ratio is important to consider when you make your move, and you have to look at the past trends for potential future predictions. And so there's a quote here from a publication, The Gold-Silver Ratio Debunking the Myth. Silver investors who are depending on a declining gold to silver ratio are betting that silver will outperform gold going forward. But if anything, the chart above shows just the opposite. For the past 50 years, the ratio has stayed above a rising trend line, taking it to much higher levels. Now, we did talk about the silver bulls and the gold bulls and how silver performed during those, and that, a vast majority of the times silver does outperform. But there are two times in the last, now and in the early 70s of the last bull runs, 5 or 6 or 7 of those times, silver outperformed during this bull moves. But the overall trend is that the silver to gold ratio is widening, so the average continues to increase as well. People ask me, what should the gold to silver ratio be? And I would say that probably 60 to 65 is probably the average that we have seen since about 2013, 2014. And it seems like that average is probably going to be changing as to really what it should be. Is it abnormally high right now? Maybe, maybe not. I'm inclined to still think it is to a point, but I don't think it's going to tighten as much as some people expect and hope for. The price range for gold over the past 10 years reflects a decline in the purchasing power of the U.S. dollar of somewhat between 98 and 99%, which is 1,000 and 2,000 per ounce, since the inception of the Federal Reserve in 1913. If the price of silver were to compare favorably with these changes in the price of gold since 1913, silver's price today would need to be at least $100 per ounce. It's not close to that, nor has it ever been remotely close to that price. As its most extreme, the silver price at its high point 10 years ago reached $50 per ounce. Worse, $50 per ounce at the same price point peak it hit 30 years earlier in 1980. Over 30 years from its price peak of $50 in 1980 to its price peak of $50 in 2011, silver had zero gains. In inflation-adjusted terms, that is a loss of 50%. That's its recent high in August. Gold reached $2,067 per ounce, a 100-fold increase from its fixed and convertible price of $20.67. That reflects a 99% decline in the dollar's purchasing power. Silver, however, managed to climb only as high as $29 per ounce and is currently at $23.50 per ounce. At its current price, silver is more than 50% lower than it was 10 years ago, whereas gold at 1880 is right about where it peaked in 2011. I will say this in reflection to silver preserving its value. I think over the course of 100 years, and if you look at a chart there, adjusted for inflation, well, silver typically does preserve its your wealth over the long period of time. And so when you take a look at these highs here, and inflation-adjusted terms from where they were, well, yeah, if you bought all that silver in that particular time period in 2011, yeah, you're going to lose 50%, no question. And that's probably more than that when you take into account inflation, really. But that's not how you buy silver. How you should buy silver as a hedge. You buy it utilizing a method that I refer to as smart dollar cost averaging, which really is just a logical way of making purchases over the course of time and being consistent with your buying, keeping in mind your budget, and finding ways to be able to preserve your wealth in that regard with your buying power. The action in prices for both gold and silver recently over the past 10 years is a continuation of the long-term trend, which is evident in the charts above. The trend is supported by the fundamentals. The fundamentals are gold is real money, and its price reflects changes in the purchasing power of the U.S. dollar. It is a store of value for wealth-conscious investors. Silver is an industrial commodity with a secondary use as money. It is not a store of value. I disagree with that last sentence, but I do disagree with the first sentence completely. It is an industrial commodity, and it is seen as that. Gold has some features of it that make it like a commodity as well, too. But make no mistake, it is a store of value over the long period of time. But the author does finish out the article by saying that having some silver coins on hand is recommended. Expecting silver to outperform gold and make you wealthy is fantasy. Owning gold as a matter of wealth preservation. And I agree. Silver and gold are not there to make you wealthy. But I believe having some silver on hand is good. And it's good to stack silver. But to the overall subject matter at hand is, for those of you who are reading this article and seeing the fundamentals over the past period of time, that's something I've talked about for quite some time, which is why I believe in being realistic about silver. And I believe there's a way you can do that and understand that silver is money. It's what I like to refer to as hibernating money. It also holds a value that transcend price performance fundamentals that we've seen over the past decade or so. Because since 2011, yes, it's lost 50% by real dollar inflation-adjusted dollars, or real value. Inflation-adjusted, probably even more. But make no mistake, one thing is for sure, people maybe certainly feel jaded by silver, and they think, well, okay, I'm going to trade that for gold. Before you do that, these things could change. Even though we've seen this trend going for quite a while, what we saw happen still occurs today. Silver outperforms gold. We see it every time we do a market watch. And during these big price moves upwards, silver outperforms gold almost every time for those little periods of activity. So I would encourage you to hold on to your silver and maybe diversify into gold if you're not getting gold yet. And if you are a silver stacker and you have some gold, it may be good to further diversify and essentially become a more conservative investor, if that you want to use that term. And that's essentially what I'm doing. I am essentially conserving my portfolio by increasing my gold position. And that, I believe, is probably the better answer than to try to trade your silver for gold, because you're going to lose out when you do that, when you take into account the premiums, because no local coin shop or any entity, well, and at least not very many. I've heard of a few in this community. I know my local coin shop doesn't do it, and you'd be hard-pressed to find some that will do it unless there's a great demand for silver at a particular point in time. And then that is, they are going to take less for the silver than spot price in many cases, except maybe if you do it with Eagles. And then you're essentially going to take that, and you're not really trading your gold for silver, your silver for gold at that point. You're selling your silver and buying gold with it from the same shop. There's really no way to trade your silver for gold anyway, because that is how they're going to do it. They need to make a profit. Now, in the paper markets, that's a different story. You can do that all day long. In fact, there's a book that I reviewed from a member of the community for a while named Kari Ushanka, and he wrote 2 books on how to trade the ratio. And he essentially is a very, very an excellent program that he has to be able to do it, but it's all done through ETFs. That is where you want to trade. But most people in this community work in the physical realm, and so you're dealing with the physical. And I'd rather see folks out there not lose money doing that. Instead, I would just discipline yourself fiscally and just buy less silver and buy more gold. I think that is probably going to be a better route to take, and not only will it help you to have a more stable asset class, which gold is more stable. It tends to hold its value and hold its price point, and it will also provide an easier storage method, because a 10th ounce of gold is a very, very tiny coin when you take into account 20 ounces or 10 ounces of silver. The size differential is absolutely amazing, and so holding that value in such a small little space, there's something to be said for that. And gold is original money. It has been in existence for thousands of years, and silver has too. But again, silver, how long will it continue to hold this dual nature? I think for quite a while. I think it's with us. I think it's safe to say that ratio average that we talked about between 55 and 65 may not be the average if the trends continue. It may be 70, 75 might be the new average in due course. So I wouldn't hold out much hope of being able to make that ratio work in your favor if you're in the physical markets. Something to consider. I hope you enjoyed this video. Post your thoughts below. Thanks again for Bama17NC for the article. Very thought-provoking for sure. And I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.